We're back with another curious case of what's going on in cryptocurrency, and this one is a real big one. Fed sue crypto giant Binance and founder Changpeng Zhao, who is usually known as CZ on Twitter, etc., etc. So this is an interesting one because unlike other exchanges that have recently folded and are being sued or most likely having some form of criminal charge brought against them, this is not due to Binance doing anything wrong with your money, at least not from what's came out at this point. This is not an FTX situation. This is not them trading against your own interests. This is not them inappropriately using your money for some reason or putting your money somewhere you don't know where it is. This is basically them saying you are not complying with the laws and the things that we set out as the Commodity Futures Trading Commission, CFTC. So just to get that one out of the way, nothing about this is improper use of money and it's not criminal, although criminal charges may be brought against Binance or leaders of Binance at this point. It is still being considered. Now, the reason why this is such a big deal is because if you look at, crypto exchanges, at least centralized exchanges here, Binance it's not even close how big Binance is compared to everything else. If something was to go down with Binance to the point where they didn't exist or couldn't operate in the capacity in which they have been doing, then this would really, really hurt markets and cryptocurrency in general. So what exactly are they saying that Binance has been doing? One big thing is you're not allowed to trade crypto derivatives in the US without registering your exchange with this commission. But Binance were doing that for years. And then obviously once things started to blow up and things started to crack down a little bit more, they started to basically say, US customers can't do this on Binance, etc., etc. But they have internal communications from the CEO, which is instructing people on how to make new accounts using subsidiaries if you're a big institutional investor, or for normal people just using a VPN and not putting in any US documents to allow you to circumvent this and trade on the platform, which of course people are going to be doing anyway. But the problem is when you as a company are telling people how to do this, especially big investors, market makers and things like that out of Chicago and New York, which is what the allegations are, then that is a real big problem. Binance basically hosted a platform, a website, which allowed people and showed people how to get around this stuff, which is obviously completely in the face of trying to comply with US legislation and regulation in terms of not being able to trade Bitcoin or cryptocurrency derivatives. One of these such institutional investors claim, at least in CZ's word from leaked documents, that they were 12% of Binance's volume, which means, as we look here, the top crypto exchange volume, 24 hours, $11.4 billion in 24 hours. This American Chicago-based company would be 12% of that volume. And that is 12% of volume they shouldn't have been allowed to have on the platform in the first place, which not only plays into the fact that they're doing this and this is illegal as an operation in the US, but also, of course, means that other markets, other exchanges that aren't doing this are basically being muscled out by actually complying with regulations or anything like that. Because if you've got one company that's in the US and are doing everything legit, and then you've got Binance that are saying, we don't operate in the US, but are letting people do it, in fact, showing them how to do it, obviously one of them is going to get considerably more business, right? Here we go. Binance's reliance on a maze of corporate entities to operate the Binance platform is deliberate. It is designed to obscure the ownership, control, and location of the Binance platform, the lawsuit states. Binance is so effective at obfuscating its location and the identities of its operating companies that it has even confused its own chief strategy officer. You're so good at your job, obfuscating, everything going on with the business, that you don't even know what's going on. So how could anybody else know? I mean, it's perfect, right? This obviously also comes in a long line of violations and fines and investigations. And as reported here on the hub of amazing things related to cryptocurrency, Web3 is doing great. We can see CTFC is only one of several US groups looking into Binance, with the SEC also reportedly scrutinizing the exchange and the Department of Justice considering charges. Now, all the CTFC can do is fine them, but obviously as this continues on and more things are discovered, the more likely other things are to come out and also other agencies and maybe even criminal charges to be filed. They're also alleging in the same lawsuit that basically Binance have been specifically using encrypted communication with certain US partners, which again might just be a security thing, but when you know you shouldn't have US partners anyway, you're instructing them on how to avoid US regulation to use Binance at both of your benefit, because they want to make money, you want them on there to make the market accurate and also to have as much liquidity as possible so that you are the best place to be. If you're then instructing them how to do so and also communicating with them in a secure manner, that's pretty obvious, right? That you're doing something you absolutely shouldn't be doing. That seems like a fairly easy point to prove, although legally, of course, civil court is a bit of a zoo. They also have actual logs here, which are from internal communications regarding crimes being committed, and Binance knowing about that and facilitating the transactions anyway. One of the such quotes is, regarding Hamas transactions in February 2019, Lim explained to a colleague that terrorists usually send small sums as large sums constitute money laundering. Lim's colleague replied, can barely buy an AK-47 with $600. And then, of course, they also discuss Russia, which Lim acknowledged in February of 2020, saying, like, come on, they are here for crime. So they know that essentially crimes are being financed through Binance, and yet they do nothing about it, which again is against the rules generally. The complaint also alleges that at least until May of 2022, the company being Binance, of course, had not filed, quote, a single suspicious activity report in the US. Which, of course, they're not going to, are they? Because they're saying, at least the quote is from the CEO of Binance, they don't have US users on their website, and they've taken strict measures over the last 2 years to ensure they have no US users. But obviously everybody knows that just isn't true. Like, anybody with any common sense knows Binance has US users. And then, of course, within this document, within this lawsuit, they do show that they provably were giving access to VPNs and how to set up accounts for big market-making firms, as well as, of course, a website hosting the ability to make accounts via a VPN for just regular US citizens. Apparently, in the month of August 2020, the platform earned $63 million in fees from derivatives transactions. That's just in fees. And that about 16% of its accounts were identified as being held by US customers. And this, by the way, is from a Bloomberg report. If you want to go and check that out, I'll leave a link in the video description. So there's been a lot of allegations flying around about Binance for quite a while now. And one of the ones I read recently was they were basically saying Binance CEO and obviously execs were essentially operating the company with as much of a lax regard for regulations as humanly possible, so that they could get the company to be as big as it is, to be the titan of the industry, and then basically to bring in the things that would allow them to not actually get caught and have bad things happen to them in the US predominantly, but other places as well, which of course has worked. So while there's no jail time on the cards here, this is strictly going to be fees and fines if anything actually comes of it. This does look interesting because it goes to show nobody's safe. If they're going after Binance and there's multiple agencies and potentially criminal charges coming against Binance, then that's the big boy. That's the one that if Binance goes down, that means the whole house of cards could collapse, at least in terms of centralized exchanges. And of course, things like this are even worse when you consider that with all the contagion going on in crypto and all these other exchanges losing their ass and going bankrupt, etc., people not having access to their funds. We've seen bank runs in real banks recently. If everybody pulls their money from Binance, is Binance going to have all the funds to cover? And obviously things like this, FUD, fear, uncertainty, and doubt, can have that impact because people think, oh, you know, Binance are getting sued, that's probably not good, I should pull all my money out. If everybody does that, is there going to be a problem? Because as we've seen with other exchanges that say, yeah, we've actually got everybody's money, it's all good, they usually don't. So is that the case here? We'll have to wait and see. We'll have to wait and see how this impacts markets and things. The price currently hasn't really changed all too much in terms of Bitcoin or the entire market. So maybe this was already priced in, but we'll have to wait and see. Thanks for watching as always. See you next time. Peace out.